You paid the IRS during COVID, but here is what nobody told you. In November 2025, a federal court ruled that the IRS may have had no legal right to charge you penalties or interest for certain late filings and payments made between January 20, 2020 and July 10, 2023. Not a portion of what they collected, potentially all of it. Every failure to file penalty, every failure to pay penalty, every estimated tax penalty you paid during that 3.5-year window. And the IRS's own internal watchdog, the National Taxpayer Advocate, published a public statement on April 30, 2026, saying tens of millions of Americans may be entitled to refunds. But here's the problem that almost nobody is talking about. The deadline to file your claim is July 10, 2026. That is 9 days from today. The IRS is not going to send you a notice. They are not going to call. Nobody from your HR department, your bank, or even your accountant has probably mentioned this because most of them don't know it exists yet. If you're a retiree living off IRA distributions, pension income, or Social Security, I need you to watch this entire video because the type of penalty most retirees paid during COVID is exactly the kind this court ruling covers, and the steps to claim your money back are simpler than you think, but you have to act before July 10th. The court case nobody told you about. In November 2025, a case called Kwong versus United States, case number 179 Fed Claims 382, was decided by the United States Court of Federal Claims. You will not find this in any mainstream financial headline. Most accountants haven't brought it up. Most financial advisors haven't even heard of it. And the IRS, which disagrees with the ruling, is certainly not advertising it. Here is what the court found in plain English. When the federal government declared COVID-19 a national disaster on January 20, 2020, a specific section of the U.S. tax code called IRC Section 7508A was automatically triggered. That section says filing and payment deadlines are postponed for the entire duration of a federal disaster, plus 60 additional days after the disaster ends. The COVID-19 Federal Disaster Declaration stayed in effect until May 11, 2023. Add 60 days, you land on July 10, 2023. The court's conclusion: tax returns and payments due any time between January 20, 2020 and July 10, 2023 were not legally late until after July 10, 2023. And if they weren't late, the IRS had no legal basis to charge penalties or interest on them. But they did charge them. For 3.5 years, they collected penalties from Americans who filed a few weeks late or paid a few weeks late during the most disruptive period of our lifetimes. Under this court ruling, that money may have to come back. Let me be specific, because this is where most retirees don't immediately connect this to their own situation. 3 categories of penalties may qualify for a refund or abatement. First, failure to file penalties. If your tax return arrived after the filing deadline during any year from 2020 through early 2023, the IRS assessed 5% of your unpaid taxes per month, up to 25% total. If you owed $6,000 in taxes and filed 3 months late in 2021, that's $900 in penalties. Under Kwong, that return may not have been late at all. Second, failure to pay penalties. If you paid your tax balance after the due date during that same window, the IRS charged 0.5% per month. On a $15,000 balance paid 5 months late in 2022, that's $375 in penalties, plus compounding interest on top. Third, and this is the one that hits retirees hardest, estimated tax payment penalties. Here's the thing most people overlook.
If you are retired and taking distributions from a traditional IRA or 401k or receiving pension income, you do not have payroll withholding. Your employer is not sending taxes to the IRS every 2 weeks. That is your responsibility through quarterly estimated payments made in April, June, September, and January. And those payments have to be close enough to your actual tax liability, or the IRS penalizes you for underpayment. Imagine a retired couple, both in their mid-60s, living on a $90,000 IRA distribution plus $34,000 in combined Social Security. Their federal tax bill in 2021 was roughly $14,000. They made quarterly payments throughout the year, but one quarter came in $2,200 short because they miscalculated their withdrawal. The IRS sent a notice in 2022, failure to pay estimated taxes, penalty of $340 plus interest. They paid it because the IRS told them they owed it. Under the reasoning of Kwong, that payment may not have been legally owed, and they can file to get it back. Multiply that across 2 or 3 years, across 2 or 3 penalty types, and we are talking about real money that may be sitting in IRS accounts right now with your name on it.
If you've received any IRS penalty notice between 2020 and 2023, stay through the next 10 minutes. I'm going to walk you through exactly what to file, what to write on the form, and how to mail it so you have proof of timely submission. The whole process takes about 45 minutes. Now, I want to explain why the IRS disagrees with this ruling, because understanding that disagreement is what's going to motivate you to act before July 10th instead of waiting to see how this plays out. The IRS's position is that IRC Section 7508A only postpones deadlines for a narrower set of situations, not for the full 3.5 years of a disaster declaration. The court in Kwong disagreed. The ruling used the plain language of the statute. The postponement runs from the beginning of the disaster declaration through the end of the declared disaster period and until 60 days after. So we have a federal court ruling on one side and the IRS's disagreement on the other. The National Taxpayer Advocate, Aaron Collins, expects the Department of Justice to appeal the Kwong decision. That appeal could take 1, 2, maybe 3 years to fully resolve. And here is the critical thing. The statute of limitations for filing a refund claim is generally 3 years from when you filed your return, or 2 years from when you paid the tax, whichever is later. For most people who paid penalties during 2020 through mid-2023, that 3-year clock ticks back to July 10, 2023, the end of the disaster period. 3 years from July 10, 2023 is July 10, 2026, 9 days from now. If you wait for the appeal to finish before filing, you will have missed the window permanently. No court victory will recover money for people who didn't file a timely claim. The appeal doesn't extend your deadline. Only your own filing does. Here's what most videos on this topic miss entirely. And this is the reason a lot of retirees are going to lose this refund even if they hear about it. They look at their records. They think, maybe I paid $400 in estimated tax penalties in 2021. That's not worth the hassle. I'd need to dig through 4 years of paperwork, and the IRS might just reject it anyway. So they do nothing. That thinking will cost them, because there is a legal tool called a protective claim, and it changes the calculation completely. A protective claim does not require you to know the exact dollar amount you are owed. The IRS's own Internal Revenue Manual, IRM Section 25.6.11.10.32.5 under 2, defines a valid protective claim as a filing that simply identifies the legal issue, describes the basis of the claim, and specifies the tax year or years involved. You are not committing to a number. You are not demanding an immediate refund. You are filing to preserve your right to a refund if the courts ultimately rule in the taxpayer's favor. Think of it as planting a flag in the ground. You are telling the IRS, I believe I may be owed something under the Kwong ruling.
Process my claim when this is resolved. The IRS holds protective claims in suspense while the appeal continues. When the courts reach a final decision, if that decision upholds Kwong, your refund processes. The IRS comes back to you, asks for exact amounts, and returns what they collected improperly. If you never filed, you get nothing, even if the court rules 100% in favor of taxpayers. A protective claim costs you a stamp. The potential benefit is hundreds or thousands of dollars, and you don't have to calculate anything to file one. Now, I want to say something directly. The National Taxpayer Advocate's April 30th, 2026 statement included a warning. Without action, this will produce dramatically different outcomes for the well-advised versus the unaware. People with accountants and tax attorneys will file claims. People without representation, many of them retirees on fixed incomes, will never hear about this and miss the window. You are watching this video. You are now informed. The only question is whether you act. Here are the 4 steps. Step 1. Pull your IRS account transcripts for tax years 2019 through 2022. Go to irs.gov. Click Sign In to your online account. Create an account if you don't have one. You'll need your Social Security number and a way to verify your identity. Once you're in, pull your account transcript for each year: 2019, 2020, 2021, and 2022. Look for any line item labeled Failure to File Penalty, Failure to Pay Penalty, or Estimated Tax Penalty. Also look for interest assessed on those penalties, lines labeled Interest Assessed. Write down every year where any of those appear. If you can't get online access before July 10th, call the IRS at 1-800-829-1040 and request transcripts. But do it today. Processing takes time. Step 2. Download and print Form 843. Go to irs.gov and search Form 843. You can also download it from the link in the description. The form is titled Claim for Refund and Request for Abatement. Download it, print it. You cannot file this electronically. The IRS requires paper. Print 1 copy per tax year where you found penalties. Step 3. Complete the form, one for each qualifying year. You do not need to calculate an exact dollar amount for a protective claim. If you do know the exact amount, because it's clearly on your transcript, you can include it, but you don't have to. File a separate Form 843 for each tax year. Penalties from 2020 and 2021 are 2 separate filings. Step 4. Mail by certified mail with return receipt requested before July 10th. Do not use regular mail. The IRS provides no electronic confirmation of receipt. Your certified mail receipt is your legal proof of timely filing if the form is delayed or lost. Mail to the IRS Service Center where you normally file your Form 1040. For most retirees in the continental United States, that address is listed in the Form 843 instructions at irs.gov. It varies by state. Look up the correct address before mailing. Allow extra time. Mail your forms by July 7th or 8th at the very latest to be certain they're postmarked before the 10th. Before I go further, let me be honest about something. This refund is not guaranteed. The IRS disagrees with the Kwong ruling. They're expected to appeal. A higher court may ultimately rule in the IRS's favor, in which case no refunds would be issued and your protective claim would simply be denied. Filing a protective claim today does not mean you'll definitely receive money. It means you will not be permanently excluded from receiving money if the courts ultimately agree with the Kwong decision. And there's a second limitation. This applies to penalties and interest that were assessed during the COVID disaster period. It does not change your underlying tax liability, what you owed in taxes. If you legitimately owed $12,000 in income tax for 2021 and you paid it, that tax itself is not refundable under this ruling. Only the penalties and interest assessed on late payments may be. That distinction matters, and I want you to understand it clearly before you file. 3 mistakes that will cost people this refund. Mistake 1. Filing for only 1 year. If you received penalties in 2020, 2021, and 2022, that's 3 separate Form 843 filings. Each year's penalties have their own deadline. Filing for 2021 alone does not protect your 2020 or 2022 claims. File for every year where a penalty appears on your transcript. Mistake 2, a vague protective claim. The IRS's own IRM says a general statement like, "I reserve my right to a refund later," is not sufficient. Your Form 843 must identify the legal issue, Kwong, describe the type of penalty, and name the specific tax year. That's all it takes, but it has to be specific enough that the IRS understands what you're claiming and why. Mistake 3, assuming your CPA handled it. The Kwong decision came down in November 2025. Many tax professionals have not yet advised clients about it. The National Taxpayer Advocate explicitly warned that taxpayers without professional representation face the highest risk of missing this window. Ask your preparer directly, "Have you reviewed my 2020 through 2022 penalties for a Kwong-based refund claim?" If they don't know what Kwong is, you now have more information than they do. Act accordingly. Here's what this situation actually reveals about retirement taxes. Most retirees treat their past tax payments as settled business. You filed, you paid, you moved on. The IRS sent a notice, you wrote a check, end of story. The Kwong case proves that assumption is not always correct. What the IRS says you owe and what you legally owed are sometimes 2 different things, and the only people who recover the difference are the ones paying attention. But the lesson here goes further than this one refund window. Every year in retirement, there are decisions about when to take Social Security, about which account to withdraw from first, about Roth conversion timing, where the difference between the right choice and the wrong one is measured in thousands of dollars over time. And in almost every case, the people who know about the decision and act on it keep more of their money. The people who don't know, or who assume the system is handling it fairly on their behalf, leave it behind. This refund exists. The court said so. The IRS's own watchdog confirmed it publicly. The only thing standing between you and it is 9 days, a printed form, and a trip to the post office. After this video, do one task, just one. Log in to irs.gov, go to your online account, and pull your account transcript for 2021. If you see any penalty listed there, you have work to do before July 10th. That single transcript will tell you whether your specific situation warrants a filing. Start there. Everything else flows from that first step. Before you go, I want to ask you something directly. Did the IRS ever send you a penalty notice during COVID, and did you just pay it without questioning it? Drop yes or no in the comments. I actually read every single one, and your answer will help other people watching this video realize they are not alone in this situation. And if you want to go deeper on any of these, how having a pension changes everything in retirement, or how withdrawal order changes your lifetime tax bill by tens of thousands of dollars, those videos are right here. Whichever you choose, I'll see you there.